According to agencies, here's what counts: how much you owe, regularity of your payments, whether you stay within the limits of your credit allowance, status of previous credit applications, whether they were denied or approved, age of accounts, electoral roll status, and accuracy. Now, why would we even want to have a high credit score in the first place? What does this allow us to do? Well, it's a good indicator that we are responsible with money. It's a great social flex. You can use it on dates and with your friends, and let me know how it goes in the comments below. All jokes aside, as a written confirmation that you have good hands with money and debt, you're more likely to get lower rates on finance deals, so cars and loans, etc., and access to better financial products, higher reward credit cards with cashback, free hotel stays, and things like that. It may help you with your first house application if you're a first-time buyer, but for sure it is not the most important factor. Your income, which is a salary, not how much you actually earn, and your deposit will be much more important. This video is not focusing on housing, but I know some people trying to buy a house for the first time think their credit score is the most important factor, hence why I mentioned it now. So now that you know the benefits of having a higher credit score and the factors which your score is based, how do you actually go about improving it? The first step, although it's not explicit from the factors above, would be to secure a job or some form of employment or regular income. You will find it extremely difficult to maintain regular payments and keep debts low without a reliable income. However, getting a job is much easier said than done, and so I'd recommend checking out my other video on that. The next step is to choose a credit record agency, such as Experian, TransUnion, Credit Karma, etc. Learn to understand and interpret the score they give you, since different agencies will quote different ranges. Don't be disheartened if it's low, because that's normal when you first start taking care of these matters in life. To improve your score, you need to demonstrate that you're good with money. So as ironic as it sounds, you essentially need to take a loan or some sort of financial product to prove you can pay it off, use it responsibly, and maintain regular payments. When you check your score for the first time, make sure you find out if you owe any money. It's very common when you first check your score, it might be low because an account you forgot about was in overdraft. So before we even begin to improve your score, you can stop it going any lower by ensuring the report is up to date, it's correct, and clearing any debts or overdraft which you might have discovered. This is why getting a job is a really useful thing to do beforehand. Okay, so now about getting a financial product. This could be a first car, a bill, or a credit card. Credit cards are the easiest ones to start with. When you first start looking into this, you may find it difficult for any companies to take you on, as you have a limited credit history. A great company to apply to if you're responsible for your first card is American Express. They tend to be more willing to give you a chance, they have very friendly service, they're widely accepted, and have a very helpful policy when it comes to increasing your credit limit. Now with this card or loan that you get, ensure that you are regular with all of the payments and stay within the terms and conditions. Don't withdraw cash, etc. Make sure you pay all the annual fees and so on. Having a job or improving your regular income, as I mentioned earlier, will make this step even easier for you. This will help establish yourself as a reliable person to lend money to, and over time your score will improve. The next part, which improves your credit score, is your credit limit. This is essentially how much money companies trust you to pay back within a given time period. It's usually a month. When you first apply, your credit limit will usually be quite low. However, after a few months of making regular payments, give the company a call and explain you are trying to build your score. Some companies are very helpful and they will increase your limit at given intervals for you. Over time, this will build up and increase your credit score. Just a side note here, as previously mentioned, I found American Express to be extremely helpful for this, especially when I explained the situation on the phone to them. Within a year, my credit limit has more than tripled with them, and this has had a good impact on my credit score. I'll leave a link in the description if you're interested, and they also have a free eligibility checker. Other credit card companies, which I will not name, have not been as useful with this, and consequently, I closed my accounts with them. Another thing that might help you is registering on the electoral roll. This will make it easier for companies and credit agencies to verify your address, and this may improve your score if you haven't done so already. Taking a mortgage or being a homeowner indicates that you are you're more stable financially and more stable person to lend money to, and it does tend to improve your score. However, this is a very big commitment in life, and you may be watching this video to try to improve your score as you may be trying to buy your first house. So this factor will not affect you too much, as it usually would only improve your score by less than 10% of the maximum amount, so it's not the one to focus on the most. Things that will decrease your score: opening too many accounts too quickly. Try to avoid opening more than one account within 6 months, and that includes credit cards or bank accounts. Not paying off debts or missing payments. Withdrawing cash from credit cards, a CIFA, or any fraudulent activity found on your account. Being denied a credit application. So choose very carefully when to apply. This can be really hard in the beginning, and I would definitely recommend using the eligibility check as I mentioned earlier, as we have just mentioned that being denied a credit application will decrease your score and make it harder for you to apply to more things and improve your score. So what you need to do is you need to make use of these free eligibility checkers. When you go onto a credit card website or a loan, there will usually be an eligibility checker. It's not the most accurate thing, but if you do it and it says you have a 0% chance of being approved, don't bother applying. You're just going to negatively impact your score. The other thing about these eligibility checkers is they are only a soft check, so they will not impact your score as a hard credit search, and that's why you should be using them. Some caveats to mention: your score is your responsibility, and these are just some helpful tips. Although opening accounts may decrease your score in the short term, over time this will have less of an effect. And when you consider things like current account switches, the benefit may outweigh the risks, as the cash advantage, particularly in the cost of living crisis which we live in now, will prove more useful than a small lowering of your score, which will be corrected after a few months anyway. So there you go. I hope you enjoyed these tips about how to improve your credit score and things to avoid when trying to stop it going lower. Let me know what you think in the comments below. Take care, and I hope you enjoyed the video.